Good morning. This is Wilkey with Startup Trading. It is Thursday, April 30th, 2020, around 8:46 a.m. Eastern Time. The last trading day of the month, obviously. Tomorrow is May 1st. So we will see. It's not like it's the last day of the quarter or anything. So uh, if we look at our time frames, we have bullish on everything except for the 20 to 60 days, which are neutral. And then if we look at the year to date, we can see that only the NASDAQ is positive so far. We'll glance at that in just a second. So this morning, I didn't even see anything cross my headlines. We had ECB at 7:45. I saw nothing flash. We had unemployment claims at 8:30. We have now topped 30 million jobs lost since in the last 6 weeks, basically. So that have been able to file their claims, that is. And then we're supposed to have an ECB press conference at 8:30. I don't know if that's going on or not. And then it doesn't seem to be doing much for the markets if it is. And then at 9:45, we're going to have Chicago PMI. Tomorrow morning, we're going to have ISM manufacturing at 10 o'clock. Last night after the bell, we had Facebook, Microsoft, and Tesla that hit the NQ. If you notice, NQ spiked up, put in some excess between basically 4 o'clock and 5 o'clock Eastern time last night. This morning we've had ConocoPhillips. And then tonight after the bell, we're going to have Apple. Apple will not report until after 4:30 p.m. Eastern time, so there is no Nadex play involved with Apple's impact on the NASDAQ. So, and then tomorrow morning before the bell, we're going to have ExxonMobil. ExxonMobil did come out yesterday, though, and affirm that they were going to keep their dividend unchanged for this quarter. So that should be helping them. So if we go down to these, these time frames, we can see again the outperformance of the Russell over here, and then you look at the 5 days outperformance of the Russell. The rest of the three look pretty close together, right? And believe it or not, the NASDAQ is the laggard. At the 10-day period, pretty close together. Russell, RTY outperforming. Same thing on the 15-day period. Here you've got the Dow's the laggard, and then we'll go down to the 20, and the Russell's even beaten them there. So we look at the 60-day time frame. You can see the catch up now that the Russell is playing with the rest of them. But over the last 60 trading sessions, you can see that the Nasdaq is still outperforming. But you can see that it's kind of flatlining as the Russell and the others are making a little bit progress to catch up to it. And you can see why, right? Because the NASDAQ is still flat to up year to date, right? It's up right now, and the rest are down considerably year to date so far. So they have to catch up, and the Russell has the most catch up to do. But the Russell has been the laggard for quite some time. Last year it was the Dow that lagged. Previously, in 2018 it was the Russell. And then in 2017 it was the Russell. So the Russell's been a dog for a while here. So one thing I want to show you is this 2 grid. These are just range analysis that I use on the bottom while I'm watching it, just something I wrote myself. So, but basically the purplish blue line here is the VIX, not the /VX, but the VIX, which is the instrument that basically shows the rate of insurance premium on the options market for the S&P 500. So as we look at that, it stayed near the high of the days all day yesterday, while the market, which is the yellow line here, the S&P 500, stayed at the top end of its range all day yesterday too. And you can see, the S&P over here, traded the halfway back, went up, didn't hit targets, come back, hit the 38.2 into the close, and then, exploded in that 4 to 5 o'clock session. So the last time that this pattern happened on the bottom of this grid was February 19th. On February 20th in the overnight session, we hit the all-time highs for the S&P 500, and then we had basically over 1,000-point drop in the S&P 500. I'm not calling for a 1,000-point drop, but I'm saying that you probably should be watching your longs now and maybe thinking about protecting them a little bit more with stops, or just exiting for a little bit. We're due for a retracement. If we look at the overnight session, 52 points, and if you look, here's where we close. This is the last bar coming into the close yesterday. We had Microsoft and Tesla and Facebook report, right? They shot this up, and there were some other people that reported, obviously, right? So they shot it up to this high. Basically, if you look at from, we'll round this to 29.30, got up to, basically 29.60. So you got another 30 points in this 45 minutes that most people don't trade in. And then overnight, right, we come back down, couldn't take out those bottoms, didn't even that close to them really, and put in an incremental higher high. This is the same pattern that persisted out of that chart pattern that I was showing you on February 19th and 20th that led to that 1,000-point sell-off in the ES. So I think that, to be honest with you, I'd rather be looking for shorts. I would not like to participate on anything to the long side personally until we see that the short sequences break. So this could take the rest of the week to slowly go down, and then next week start accelerating. So we'll have to watch. Be careful if you swing this weekend, holding over the weekend, see what you get in there. So looking at all the indexes, you can see that the NASDAQ has relative strength, right? It's just now getting back into yesterday's range because it had that big pop up from those reporters last night, and then those reporting earnings, that is. And then we'll see what happens to that. But you look at the other three indexes, right? At yesterday's low already, the Dow is below yesterday's low. The rest of them are below value area low and approaching the previous day's low and following, while the NASDAQ, right, has relative strength. But I would not look for that to, really curtail. So I would just stay away from playing the NASDAQ for a few days. Play the ES. The Russell is, even though it's been the stronger one, probably could retrace a little bit as well right now. And then as we look at, again, the left side of the chart is from yesterday, the right side is from the overnight session. Look at the ES, right? The burnt orange line is the line in the sand. That is the 61.8 on an automated draw. You can see, selling the 50, selling the 50, selling the 50, and then going down to targets. You're actually in an extension sequence right now on a micro level. From basically, you can zoom in and get the levels yourself, but basically from 29.38.75 down to lows. That's going to be the area that you could watch if you want to aggressively watch for a break and maybe, look to get long on the next sequence. And then you can see for the bulls, right, nothing but resets. Every time a new low is made, this draw automatically resets. Looking at the NASDAQ, even though it's stronger, right, relatively speaking, as far as the percentage up and down from yesterday's close, you can see, selling the 38.2, selling the 50, going down to targets. And it's actually in an extension sequence right now on a micro level from 90.63 down to low, and you can see if that breaks or not. Looking at the Russell, same deal, selling the 61.8, selling the 50, selling the 38.2, down into targets. Again, you got a micro sequence in this now from 13.55.10 down to low. So looking at the ES, really what can we happen? And, there's not going to be any real shorts to claim we're going to have a chance at, dropping 1,000 unless we get below this 28.81. So we'll see how it plays out. And we're right at these previous highs. I mean, we could draw a line right at 29.05 if we wanted to and see if it pauses there. But really, until it gets under and stays under with some conviction under 28.81, we should pretty much cut through all the way like butter down to 27.51 by losing 28.81. There's 130 points right there. So looking at the NASDAQ, same thing. Unless it breaks 89.22, you're not really thinking that it has any chance of doing anything. And really, I'm not even going to put anything on the chart. You could throw one up at basically 89.61 if you wanted to, and then write it down. But getting below that level, basically, we'll call it round it to 8,900, should lead you down to around 8,400 and 20. So we'll just round that to basically 500-point drop that you could be looking at in the NASDAQ if it breaches this level in the next few days. If it holds these levels, right, you're looking at it could go back up to the 92.50. That's the next target up. So we'll see how it plays out. Looking at the Russell, again, there was nothing in between here on this for me. You could now draw something right around 1320.40, and then you could also watch this leg start up at 1306.30 and then see if that holds it. But really, the Russell needs to get back below basically 1268.20, and then it has a chance of getting down to 1167. So about 100 points in there for the Russell once it gets down there, but it has a ways to go to prove that it is a short right now. Remember, it has over the last 60 trading days, right? It has caught up and it has become the leader for the most part over the last 20 days for sure. Looking at the Dow, same thing on it. The Dow is really not going to get any convicted selling unless they can get basically below 23,967 to 23,904. It's got to break this support resistance band. So getting below 23,904 is going to lead to some bigger selling, and that should lead you down at least minimally to 22,810. So first we got to see if these levels hold. This is going to be a back end check and a fill at this point in time. And right now we're at the previous day's highs, right? So which is always an important key level. So as we look back at the indexes and kind of watch what's important today. Remember, when we started selling off from that all-time high on February 20th, we only lost incrementally the first few days. It was the following week that selling started accelerating. So we'll see how this plays out and if we can lose those technical levels. But we could, basically today and tomorrow go into those support levels that I was talking about and then break them in the Sunday night open potentially next week. I hope this helps. You guys have a great day, and I will talk to you tomorrow.